Morning, viewers. Today we are going to continue with our series, financial management, and the topic for today is what we call the business environment. And for the business environment, our main emphasis is going to be on the external environment. It's what we are going to dig deeper into, and we see how we can be able to analyze the external environment. Though we are going to also to look at the internal environment. In other words, business environment comprises of the internal and the external, but our emphasis is going to be on the external environment. As you've noticed that the paper for financial management was changed to paper 8. It was paper 10, so it was changed to paper 8 because of the revision that was made in the syllabus of 2016 to 2022. Actually, the revision was made in this year, 2023 to 2027, for the next 5 years. So from the videos we are going to be making from today onwards, we are going to be focusing on the things that are going to be accompanied within the financial management that are embedded within the changes that were made in the syllabus. There are some few aspects that were introduced, like Islamic financing, as we shall look at them, business valuation, and all that. But other things remained constant or they remained unchanged. So the same way we looked at them previously is the same way we are going to be handling them starting today. So our topic is business environment, and I want to take an example. Maybe if we try to look at a company called, let's just use maybe ABC Limited. If you try to look at the company ABC Limited, and we look at where it is located, we see maybe the staff that are within that organization. We look at the technology they are using. We look at maybe the internal control system that they are using within the organization. We look at maybe the security component within the building or within the location or the area of operation by the company. We are trying to look at the internal environment. If we try to look at the location where the company is located, we look at its staffs, we look at the technology they are using, we look at maybe the security component that is around the building where the organization is located. If you try to look at the internal control system, all those aspects lead to what we call the internal environment. But what we are trying to look at in terms of the internal environment we are looking at the environment that is within the organization itself. And that's what we call the internal environment. Remember, our business environment is made up of the internal and the external. But the internal environment is not all that hard to be analyzed by the company or by any financial analyst or consultant. But what gives headache maybe to most of the students is the aspects that are outside the organization. And those are the ones we call the external environment. And that's where our focus for today is. But back to our company, ABC Limited, we said we look at where it is located, the staffs, and all other components that are within the organization itself. That environment, if you try to do the analysis of that environment, we say that you are looking at the internal environment of the organization. And to the economist, for the economist, they call that environment, they call it the micro layer or the micro environment. And it is that environment which includes the business and its own staff, the people that are working within organization, plus all the other components that we spoke about. However, we can just see that immediately after the immediately outside the organization, after you've looked at the location of the organization, all the aspects that are within the organization, we have the other side that is outside the organization. And that environment that is outside the organization or the business, we have another, it is also another layer, which the economists also call the meso layer. And within that meso layer, or the environment outside the organization, now this is beyond the location of the organization. It's maybe outside the company buildings. Now we try to look at the environment that is beyond the organization itself. And within that layer, what we call the meso layer or the external environment, we have people like customers. Those are the people who buy our merchandise or our inventory. We have the suppliers, we have the competitors, we have the government, and other people, the society at large, where the organization is located. You find that the organization has a building, maybe located maybe on the second floor, and you find that outside the business premises, there are people that have an impact to the organization. They may be in direct proportion. You may find that if, let's say, the company maybe says that we are going to increase the prices of our inventory, it may have a direct impact in that when you increase the price, you may find that you are going to be losing customers, because those customers, they are not necessarily within the organization. Those staff can also be the customers. Of course, they may also buy our stock, but not to a larger extent. So we are trying to look at those people who are going to be buying our items. They have an impact. And we have to analyze how are they going to be reacting, and how is their reaction going to affect our business or our operations. And when we do all that is what we call analyzing or analysis of the external environment, which the economists call the meso layer. And we said that meso layer has government, suppliers, customers, competitors, and other stakeholders that may directly affect maybe the operations of the organization. So basically, when we try to look at the external environment, we have to be able to analyze what would be the impact of those stakeholders that we spoke about that are going to be affecting the operations of the organization. But for examination purpose, we are seeing that with most of the financial management paper, we find that we don't go deep into this analysis of most of these items. We just identify them. We just know their impact, but not go into further analysis of how certain things are going to be determining the operations of the organization. Maybe in business strategy and the integration of knowledge, that's where you find that the examiner is going to be asking how you can be able to analyze both the internal and the external environment that are going to be affecting the organization. But maybe to give you a highlight on what, if the question has been asked maybe like that, if let's say the question is general and you want to see how you can be able to analyze both the internal, what we call the micro layer, and the external, what we call the meso layer, as they are termed by these economists of ours. First, if you try to look at the internal environment, we always analyze the internal environment using the tool called the Swot, SWOT, which we mainly focus on, which mainly focuses on the strength, that is the S. We look at maybe the weakness, that is the other W because it is short. And those two, the strength and the weakness, they are applicable to the internal environment. Because within the internal environment, we are trying to look at what is the strength of our staffs. Are they qualified to do the job so that they can be able to produce the quality work that will be consumed by our customers? We try to look at how strong is our internal control systems. How strong is maybe the security component surrounding the organization building. We try to look at maybe the weakness. Is the internal control system weak? And if it is weak, how is it affecting the organization? Because when you use a SWOT, it does the analysis in a two-way, whereby when you use the S and W, that is the strength and the weakness, we are looking at the internal control system. But these opportunities and the threat, what forms our O and the T, those try to analyze the external component or the external environment, whereby we try to look at the opportunities that the organization can tap into from the external environment. Maybe what can the company do maybe to outcompete the competitors? Or how can the company perform, or what can the company produce to be able to capture the market? So those are the opportunities. We try to look at the opportunities. Then we have the threats. maybe the society, you wanted to set up a company, but when you try to analyze where the organization is located, you find that you can't actually put up that product, or you can't put up that business because of the threats from the public. So those are the things we'll try to look at, and we'll be able to analyze the environment or the business environment or the environment around the company or the business. But when you use this short tool to analyze both the external and the internal environment, you'll find that you'll be limiting yourself in the sense of analyzing the external environment, because you'll be looking at only the opportunities and the threats. To analyze the external environment. For the internal environment, it's okay, you can use the strength, because these are the things that are within the organization. You can use the strength of the organization and the weakness of the organization, so that you can be able to use the strength you have to be able to mitigate the weaknesses that have been affecting the business. For it is okay. You can use short to analyze internal environment, but it will limit us getting or scoring more marks when we use short to analyze the external environment. So we are going to be seeing what tool can we be able to use so that we can be able to maximize the marks that are going to be given when we are analyzing the external environment, as we are going to be looking at it. So we said, if we are to use SWOT, this is where I want you guys to get me clearly. I'm not saying that we can't use SWOT to analyze both the internal and the external environment. But we are saying that SWOT, though it is one of the methods that we can use to analyze both, we can analyze the business environment. But we are saying that when we compare the strengths or the weakness, maybe of the company, we compare how strong or weak are the company board, the board of directors. We look at maybe the staff, internal control system, the computers, the technology that has been used in the organization. All that is actually the strength and the weakness. We try to look at how weak is it, how strong is it. And we said that when we move into the opportunities and the threats or the challenges, especially maybe the competitors, it's those two items, the opportunities and the threats, that can help us to analyze the external environment. But we concluded and we say that when we use the SWOT to analyze the internal environment, then we are going to be focusing or limiting our analysis on the strength and the weakness. Meaning that if we are to complete the whole business environment, we have also to look at the opportunities and the threats to analyze those threats, to analyze the external factors or the external environment to the organization. And we try to look at how are they going to harm the organization, or how are they going to help the organization move forward. Maybe if, let's say, we try to look at the competitors, if you try to look at the political regime or the political aspects, if you try to look at maybe the customer side, are we having business that is actually fitting the society, whereby the customers are going to be able to buy whatever products we are going to be producing? So we try to look at those when we are using the Swot tool. So for those that are doing maybe business strategy, you may be able to analyze Swot. You analyze the business environment using Swot, but you are focusing the internal environment on the strength and weakness. Then you look at the external environment at the point of the opportunities and threats that are going maybe to harm the organization, or they are going to help the organization move forward. So with that, we have understood that Swot can be used to analyze the business environment. But we are saying for financial management, if the question says analyze the business environment, and specifically you are looking at a side where you are going to be analyzing the external environment, we are saying Swot won't be a right tool for you to use. Because if you use it, you will not be penalized, but you will be scoring less marks as compared to someone who will be able to use a different tool that will help that person to analyze the external environment, as we are going to look at it. So that's how we can conclude the Swot. We said that Swot is a two-way tool that can help us to analyze both the internal and the external environment at the same time. So therefore, we are looking at the way how we can be able to maximize the maybe the marks. If let's say the question says analyze the business environment, and you find that they have given you maybe 10 marks, you can't use Swot to analyze and you'll be able to score all the 10 marks that are being provided by the examiner. So we are saying that we are going to be using a tool which we call, I term it as Pastel. It's not the other accounting software, the outdated one, but it's a tool that we are going to look at to be able to analyze our external environment as far as financial management is concerned. Because when we try to look at the external environment, there are so many tools that we can use to analyze the external environment. There are very many, but as part of financial management, we are going to look at some, but basically for financial management, you focus, or you put your emphasis on the Pastel tool to analyze the external environment. One of the tools that we have that can help us to analyze the external environment, we have the Porter's 5 forces. These Porter's 5 forces is also a tool that we can use and be able to score more than, because if it is Porter's 5 forces, it means there are 5 points there. You can pick and be able to score the marks more than the person who has used the Swot tool. So, but basically this Porter's 5 forces is used in business strategy. Then we have the Boston Consulting Group is also a tool that we can use. We said we have Swot, specifically the opportunities and the threats. It's the side that is going to help us analyze the external environment. But we are putting our emphasis on a Pastel. Basically for financial management paper, we use Pastel, even though these other tools can be able to analyze the external environment. But for financial management, let's try to look at these items that are within the tool which I termed Pastel, not the other accounting, because there is also an accounting software that is called Pastel. But we are trying to look at the Pastel in terms of the P, which is representing the political factors or the political environment, and our first E represents the economic factors, and our S represents the social factors or the society. Then our T is representing the technological factors or the technological environment. Then our second E in that Pastel tool is what we call the environmental ecology, or the environment itself, the climate, what maybe is the organization polluting the environment, on the environment which is surrounding the organization. Then we have L, that is representing the legal factors. And our last E, which I want also to put an emphasis on it, is the ethical issues. Remember, we are accountants, and we all have these codes of conduct, the way things should be done. Mainly, may I focus on the Pastel as those 6 to 7 points that you can give to be able to maximize the points that are on the question of analyzing the external environment. But we add this ethical issue because it's something we, the accountants, we have to be with. It is something that is supposed to be on our side. So it is something you can't just say doesn't affect the business, because with the accountants, we have the way we are supposed to do things, depending on the standards that are guiding us on how things are going to be done. So it is part of us. So even if you don't include it there, but it's something you're supposed to actually be knowing. So we are going to look at ethics alone, but I want you to know that ethics is something that is supposed to be part of every person that is maybe engaging this thing of accounting, because we have to follow certain rules and procedures as far as we are executing our duties as accountants. And that will lead, when we try to look at that ethic component, we will also proceed to the social responsibilities. And that is going to be in our next video, where we are going to be focusing on the ethics, and we see what are some of the ethical issues that may arise as the business is performing its operations. So back to our business, we try to look at now, we have agreed that we are going to be using a tool called Pastel to analyze our external environment. And we are saying that our first P is the political environment, or the political factors. Then we said we had our company, the company we had used, which was ABC Limited. We looked at where it has been located. We looked at the environment, or these other external factors that may affect the organization. We say the customers, the suppliers, competitors, the government, and the society at large. So we want to look at the company ABC Limited in the perspective that would the company find it maybe very easy to start to start operating, maybe in a country that has political issues, maybe let's say what is happening in Ukraine, there are wars, South Sudan, wars are, people are fighting all the time. Would it be easy for the company to start its operation there, as far as the political environment that is prevailing that those countries is concerned, you may find that the company will not find it easy to start the business that is where people are all the time fighting. So we look at the prevailing conditions in terms of maybe wars. If you're expecting maybe to happen, maybe some wars, if maybe people are fighting all the time, it will be again very hard for the business to thrive in a company in a country where the political factors, or where it has political instabilities in terms of maybe wars and all that. So if you have to analyze the political aspect, you look at maybe the company is going to be set up in a country which has a stable political background. Maybe you don't expect maybe in 10 years time wars are going to be happening, because when you set up an organization, it is basing on maybe the things that are going to be prevailing in the, because a company, once it has been established and you have motives of earning more wealth or expanding the company, you may choose a place that is free from all political aspects. So the second E, we said we look at the economic factors, and here we mostly look at maybe the tax regime. You may find that how is the government of that country is going to be taxing you, because remember, tax is going to be reducing our net profit or the profit after tax. So if the tax is going to be high, that alone will also scare the business to start, because you may find that whatever you have earned as a business, it will go to the government in terms of the taxes, and you end up remaining with nothing that is going to be distributed to shareholders or to different stakeholders. So it's a challenge that if, let's say, maybe the tax regime is not good, so when you're analyzing, it is a two-way argument, where you look at what happens if at all the tax is fair, and what happens if the tax is high. If, let's say, maybe we try to look at the inflation, is the inflation rate, is it high or is it low? And how is it impacting the business operations? If maybe the inflation is high, it's going to raise the prices. As it raises the prices, of course, you find that the customers are not going to be buying, because prices are going to be changing all the time. So you try to analyze how is it going to affect the business you are operating in. So you find it that it would be easier for maybe the practical example, you may try to look at the Zimbabwe. You find that the inflation rate in Zimbabwe is very high. So it will be risky for the business to start operating from there, because they will know that the company will keep changing their prices, the prices for the goods, because as a result of the inflation. So you try to look at the economic factors in terms of the inflation, the tax, maybe the restrictions on the trade practices. You may find that the company has restriction on certain items, because you may say, I'm going to start a business, maybe dealing in gold. But in the country you are operating, or you wish to operate, you find that there are certain restrictions that you may not be able to collaborate with in order for the company to do business and make profits. So those are the things you try to look at when you are determining the factors that are going to be affecting the business. But they are going to be, remember, these factors, they are external in a sense that the organization has no control about them. You just have to handle them, or you just have to live with them, because there is nothing you can do much about them. In a sense that for the internal environment, for them, you can adjust, you can reduce the salary for the workers, but you can't you can't influence what the customers can buy from you, the organization. You can only adjust that depending maybe on the prices. Remember, these prices are going to be affected by the tax. So it's a kind of stuff that you try to analyze and find a way how the company can be able to operate profitably without affecting any of its stakeholders. Then the point number 3, we try to look at the social factors or the society where the organization is operating, the beliefs of the people. You may set up maybe a betting company to an Islamic country. You find that already their beliefs, the people that you are going to operate, maybe if it is a betting, they look at it as something that is, it's not a business to them. But if maybe they are following the Sharia laws and all that, you find that it's you won't do anything. If maybe you are going to look at the consumption patterns of the people that you are going to be operating in, if maybe you find that maybe the company is dealing in certain products that are consumed by maybe young population, but you find that where you are operating, there are more of the old people than the youth. So you may find that it's going to be affecting the consumption pattern of the products you are producing. So you try to look at all that by analyzing the society. It may be in the terms of maybe the purchasing power. How are they going to be buying the items depending on their consumption patterns? So that's how we look at the social factors in regards to analyzing the external environment. The point number 4, we try to look at the technological factors, and we see how things are going to be moving in terms of the technology aspects, because you find that every time technology is changing, people are innovating all the time. They are bringing in new items, and you try to see how are those items that are going to be changing all the time, how are they going to be impacting the organization? Are you going to cope up with them, or you are going to be changing with the technology, or you are going to be looking at ways you can be able to use the latest technology to be able to improve the marketability? Because you find that if you are to analyze the environment using maybe the tools that are not up to date, you find that you may not be able to capture all the items that you may need from the market due to the changes in the technology. So as far as the technology is concerned, it will be hard for the business not to respond to the changes in the technology, because most of the things, even sales, if the company is going to be increasing sales, you have to add in the social media aspect, because there is no way you can improve your performance or in terms of increasing the revenue when you ignore the social media aspect, because it's something that is developing and digital marketing is always changing. You find that there are so many things that are going to be coming that are related to the technology that will change even the way of operation. You find that if you have to increase sales, you find that you have to do maybe advertising on social medias, you press ads, you leave the other way of doing maybe television marketing. You specifically identify the objective of the target people you want to reach to, and you'll be able to place all your adverts on the social medias so that you can be able to maximize the sales. So that's how we try to analyze the technological factor. Then the other issue is about the environment. Of course, we look at here. We try to look at, if let's say you're a manufacturing company, and we try to look at the way maybe you manage your waste disposal management. You find that maybe if those wastes are going to be polluting the environment, how are you going to be recycling those wastes so that you can be able not to pollute maybe the environment, and you be able to get some more money? Because if there are these wastes, are there ways of how you can recycle them and find maybe you producing some items that you can be able to add some money on top of the main product that you are producing? If let's say maybe you are a sugar making company, you may find that the remains of the juice that you wanted from sugar, you can use it to do other products that you can also put on market, so that the wastes that would be maybe used to pollute the water, the air, and all that, is you have actually find a use for them, and you can be able to make money out of it. So as a financial manager, you try to look at also those aspects, because if you don't actually look at them, you may find even the government will intervene in terms of maybe you're polluting the environment, and you find that you start having environmental issues that are going to cost the company a lot of money in terms of paying for the damages that have been made to the public or the environment where the organization is operating. So we look at the legal factor as our last letter in our Pastel tool, which concerns about the business, because we are saying that the legal aspect comes in a sense that whenever you are starting any company in any country, you find that you have to register the company before it starts operating. So if you're going to do an illegal business, is it going to be effective in the society where you're going to set it? Because you find that you will be having charges that will be placed to you, because every country has restrictions on companies that are going to be registered. They have certain requirements and procedures you go through before you register in a given company, depending on what it's going to produce. Maybe you are setting up a company that is illegal, or it is illegal company, but the products that you are going to be producing, they are maybe restricted. And so we try to look at what is going to affect the business in terms of the legal aspects. So that's basically what we recommend as far as analyzing the external environment is concerned. But we finally look at that last item that we say, the ethical issues. Ethics is part of the things that a financial manager is supposed to be handling. And ethics, we know from our English that those are just moral behaviors that we are supposed to be following, or the things that we are supposed, the behaviors that we are supposed to be, or the things that we are supposed to be doing. If let's say you are an accountant, or you are a student of CPA, you look at the institution as the institution for the accountants, gives us certain things, or the things that we are supposed to be following, or the guidelines that we are supposed to be following whenever we are, maybe we are preparing these income statements, or the way we are making decisions, and the way we are doing business as accountants. You find that there are some practices that are going to be prohibited. Maybe if you are doing creative accounting, you are doctoring accounts, maybe you are avoiding paying taxes, maybe you're doing any behavior that is not accepted by the society. It may be from the perspective of the doctors, also they have their way of how they should be doing things. Every professional career has its own ethical issues, or the moral rights that are supposed to be followed whenever one is executing his or her duties. Because as accountants, you may find that if, let's say, you do something that is unethical, these certificates, they may be removed. They may terminate. Those certificates, and they say maybe according to what you have actually done, it's something that is not supposed to be done by maybe the accountants, and therefore we are removing the certificate from you, because they have that right. Because if you don't have that as a professional body, you may find that it will be hard to regulate how professions are going to be behaving whenever they are executing their duties. Because you may find that some of them, they may do things that are going to benefit them, but not benefiting other stakeholders. If, let's say, you are an auditor was moved from the previous way of collecting errors, finding the errors that have been detecting errors and all that, errors and mistakes, to a more professional, compelling way of the more appealing way of looking at maybe the truth, fair, and you find that when maybe those statements are prepared based on the certain laws that have been given, certain standards that have been set, and all that are going to be followed whenever maybe you are executing your duties. So when we look at the ethics, it brings us to a topic of where we are going to be concerned with ethical issues. And as accountants, we said we try to look at the things that are supposed to be done and the things that are not supposed to be done. We are going to look at ethics alone as far as financial management is concerned, because it's also a topic that everyone has to know, because it's part of the professional body that every accountant should be doing things in a way, or in a behavior, or in a manner that is supposed to be accepted by or that you based on the standards and given procedures that were set on how how accountants are going to be executing their duties. So that will bring us to social responsibility and ethics in financial management. And that is going to be coming in our next video. And that's where we are going to be looking at the unethical behaviors, the creative accounting, money laundering, insider dealing and all that. And it's one of the things that actually don't miss in the examination, because those are the things that are supposed to be part of us as accountants. So endeavor to subscribe, share, you comment, and you also put your suggestions in the comment section to see how we can be able to improve on your understanding as far as financial management is concerned. Thank you for watching. Until we meet again, it's bye for now.